Very much.
Tonight in Newsnight Scotland, what happens if or when house prices stop rising, properties don't sell and first-time buyers can't afford the deposit to get started? And how will a stalled market affect a generation of people who've grown up assuming they'll always have money in their house to fall back on? And deal or no deal, last-minute negotiations ahead of tomorrow's final budget vote at Holyrood. The signs are the budget will be passed, but what's in it for opposition politicians to vote for it? Good evening. If you're buying or selling a house, you don't need to be told the market is unrecognisable from only a few years ago. Prices are flat, the number of houses changing hands has plummeted, and mortgage companies want much larger deposits before they part with their cash. A new report by surveyors claims things will get better over the next few months, but then eternal optimism is hardwired into anyone in the housing trade. What will it be like in a world where none of the assumptions we have had about housing hold true anymore? David Allison reports.
Things have been slow, very slow. Figures just released for the last quarter of last year by Registers of Scotland suggest house prices here have largely held their value. The average house in Scotland now costs just over $158,000, a rise of 1.7% on last year. However, the number of actual residential sales has shown a noticeable decline. For example, on the same period the previous year, Moray is down 23.5%, East Dunbartonshire down 20%, and Clackmannanshire down 18%. In the major cities, transactions in Edinburgh are down 12.2% and in Glasgow down 12%. There are some encouraging signs, though. House sales in Aberdeen are only down 2.2%, while the number of transactions in Dundee is actually up by 3%. The Royal Institute of Chartered Surveyors reports a marked increase in the number of potential buyers currently inquiring about properties. But whether they actually turn out to be front-runners for the proverbial green shoots of recovery in Scotland's housing market remains to be seen.
In our Millbank studio is the economist and wealth manager Jonathan Davis, and in our Edinburgh studio the director of the Royal Institute of Chartered Surveyors in Scotland, Graham Hartley. Well, Graham Hartley, you know, no matter how, you can argue about one survey versus another, but the general trend here is pretty clear, isn't it? I mean, this is what, the third year that we're going into. Prices are going absolutely nowhere and volumes are collapsing.
Yeah, I think that's true up to a point. We've seen pretty much prices flatlining for some months now. But I would say there's a cautious optimism out there in the market, and our latest survey is demonstrating that, and that we're seeing some return to the market for inquiries, some people putting houses back on the market again. And of course we've not to fall into the trap that says a stable market's a bad market, because a stable market suits buyers. What we've really got to try and see is some mortgage finance coming back into the marketplace to stimulate the whole thing.
But this optimism is just, I mean, you know, that's what estate agents say. They always tell you things are absolutely wonderful. They wouldn't be estate agents if they didn't say that.
Well, I'm certainly not here to speak for estate agents, and perhaps you're confusing me, but certainly our members in the Chartered Surveyors with the RICS are saying that things are cautiously optimistic. And I think if we look at our reports over the last 2 years, for example, we've been very realistic about what we're saying. All we're saying now is there's a bit of optimism in the market, and that's what we're showing in our reports.
Right, but I mean, look, we've now moved into a situation, haven't we, that if you are a young couple or a young person wanting to buy a house, it's very much more difficult to get a mortgage. You're going to have to raise a bigger deposit. Prices don't seem to have fallen to the extent that people can afford them. I mean, we are living in a completely different world, yet everybody talks as if we're still living in the old world and it's just a few months until everything gets back to normal.
Well, certainly that's not what our surveys are saying. I mean, I think there's got to be realism back in the marketplace, and perhaps we've grown as a country expecting to own our own property at a very early age, and perhaps we have to be like many other countries in Europe where people rent for a period of time, and it's only sometimes into middle life and later in life that people actually start to buy. But as I say, we're cautiously optimistic. There's some signs out there, and remember, you know, it's a good buyer's market providing they can find finance.
Well, that's the problem, though, Jonathan Davis. They can't find finance, can they?
And they won't be able to find it for years. The banks are technically insolvent. The credit default swaps and commercial property losses that the banks are continuing to experience are going to just put red ink all over their balance sheets for years to come. And on top of that, Basel III international regulations require that the banks take on extra reserves right through to 2018. No, the market's collapsing as we speak.
Right, but there is something wrong here, Jonathan David, isn't there? I mean, this is a market. I mean, if young people are having to save up more deposits in order to buy a house, but they're not able to do that, then if it's a proper market, house prices should collapse to the stage where people who want to get on the housing ladder can do that.
If only it were a proper market. The fact is it's been heavily stimulated. In 2008, the government and the Bank of England slashed the interest rate from 5% to 0.5%, so that effectively meant that the supply went through the floor. And on top of that, of course, the then government gave the banks £850 billion, which bailed them out, and that produced some slight uplift in lending for a short period. Of course, the result of that is, as you said earlier, higher taxes, higher unemployment, public sector spending cuts, and so on. We've had 30 years of a virtuous spiral for the housing market. As far as I'm concerned, we now have 10 or 20 years in a vicious spiral.
Well, I mean, Graham Hartley, what about this idea this is supposed to be a market? I mean, if it really is the case that, as your own figures show, that volumes are collapsing, I mean, why don't people just... It clearly indicates that if people are selling their house, need to drop the price. I mean, there has to be a clearing price for houses in the market. And similarly, if young people can't get on the ladder, 25% of a property which has fallen 50% in value would be a lot less than they would be able to afford it. So why are those house price falls not, in fact, happening?
Well, I think what we're seeing is a sense of realism and price expectation. I certainly would...
But so, hang on a second. When you've got volumes plummeting because people are not prepared to lower the price at which they will sell their house so that people actually want to buy it, that's not a sense of realism. That's a market which is not actually functioning as a market.
Well, I think that I would dispute that, because I think the marketplace is actually demonstrating that people are being realistic in their price expectation. I think if we can go back to the introduction, for example, of the home report, one of the benefits of the home report was the buyer got a valuation up front.
But if you're I mean, anyone who bothers to look at the property pages of the newspapers knows that there are houses for sale in them that have been there for not just, I was going to say months, actually years, right? And they just can't be sold.
Well, that's largely down to an individual, of course. I mean,
yes, but that's my point. My point is, if this was a proper market, they would have lowered the asking price, and builders who are making new builds would have lowered the prices so that people could actually afford to buy them.
Well, in terms of new build, there's lots of incentives there for builders to offer first-time buyers, or any buyer for that matter. But again, you know, I don't think we should be too pessimistic about this. I mean, we've got flat line pricing. That's been the case for several months now. So, as I say, I think there's room for cautious optimism. I certainly wouldn't agree with we're into a spiral that's 10 or 20 years.
Well, aren't you being a bit down in the dumps, Jonathan Davis? Look, if the economy recovers a bit later on this year, won't house prices start to recover?
The primary determinant of house prices is lending. We had the biggest bubble in lending in history between 2005 and 2007. The banks are insolvent now. The lending is not going to return for many, many years. And then on top of that, as I say, rising unemployment, public sector spending cuts. We are in a vicious spiral down. And here we have yet another interested party trying to talk up a market. There is very clearly a difference between asking prices and transaction prices. If you look at, for example, Rightmove, which is a website which shows asking prices, there's a difference of 25% between asking prices and transaction prices. And, you know, the estate agents, the surveyors, the bankers, the mortgage brokers, they always focus on price. actually, they should be focusing on the wider economics. And you have hit the nail on the head. The volumes have plummeted. And I tell you, we have standard psychological behaviour of investors here, although, you know, they'll say we shouldn't be looking at homes as investment. Actually, people do. And people are locked in, they're anchored at the prices of 2007, 2008, the high points. People will not reduce the price. They will not try and sell the price.
Okay, all right, we're out of time. We'll have to leave it there. Luke, thank you both very much indeed. Now,